The crypto project I want to talk about today is the Canton Network, and I know right away that for a lot of people watching this, that name might not ring a bell. That's okay, because we're in a very different phase of crypto right now compared to the last bull cycle, and that difference is exactly why something like Canton even matters in the first place. The environment we're in today is not the same one where you could throw money at almost anything with a dog logo or a catchy narrative and expect life-changing gains. That era was driven by speculation, hype, and retail momentum. This phase is different. This is the utility phase, the infrastructure phase, the phase where real money, institutional money, starts demanding systems that actually work, scale, and integrate with the real financial world. And because of that, the techniques we use to find opportunities have to change as well. To explain why Canton Network is even on my radar, I have to first explain what it is not. It is not trying to be the next Ethereum killer. It's not competing for meme coin volume. It's not designed for retail traders to flip NFTs or chase yield farms. Canton is operating in a completely different lane, one that most people ignored during the last cycle because it wasn't exciting, flashy, or immediately profitable. But that lane is exactly where the biggest shifts tend to happen quietly before the rest of the market catches on. Most people don't realize this, but blockchain-style technology has already been used by institutions for years. Banks, clearinghouses, and large financial entities already rely on distributed systems to move information and value. The problem is that these systems are siloed. They don't talk to each other efficiently. Settlement times are slow. Reconciliation is expensive. Moving money across institutions requires layers of intermediaries, manual checks, and outdated infrastructure that was never designed for real-time global coordination. From the outside, it looks like a smooth system, but underneath it's clunky, fragmented, and inefficient. Now, you might think public blockchains like Ethereum or Bitcoin would be the obvious solution to this problem, but that's where things get complicated. Public blockchains are transparent by design. Anyone can open a block explorer and see transactions moving around in real time. That level of transparency is great for decentralization and trustless systems, but it's a non-starter for banks and Fortune 500 companies that operate under strict regulatory, privacy, and compliance requirements. These institutions cannot have their transactions visible to the entire world. They need privacy, control, and permissioned access without sacrificing the benefits of blockchain settlement. And that's where Canton Network enters the picture. Canton Network is not trying to be a public blockchain for everyone. It's designed as a regulated settlement layer where the largest institutions in the world can move real financial instruments privately. That distinction matters. We're talking about tokenized bonds, money market funds, repo markets, custodial assets, and collateralized instruments. This isn't hypothetical future value or speculative use cases. This is existing financial infrastructure, representing trillions of dollars, being replatformed onto blockchain-based systems that can settle faster, cheaper, and with fewer intermediaries. Canton is relatively new, and from what I've seen, it really started showing up on the radar around November. I came across it through an article by Jay Rezo, which I referenced in a previous video when I did my first review of the Plume Network. That article listed a group of crypto projects positioned as must-watch opportunities going into 2026. If you watched that episode or the one before it, you'll remember me saying that list had a lot of hidden gems on it. Canton Network was one of them. Whenever I come across a list like that, I don't blindly invest. What I do instead is write down the projects that genuinely pique my interest and then track them over time. And something interesting happened with that particular list. Within 2 or 3 weeks, a lot of the projects mentioned started moving. Not all of them, but enough to make it clear that the research behind it wasn't random. If you had paid attention to that episode and actually gone and read Jay Rezo's article, you could have already made some money. And the important thing is, it's not too late to start paying attention now. I want to be clear about something, though. I don't currently hold Canton Network. I'm still feeling it out. There's a lot of information to digest. And that's part of proper research. I don't rush into things just because something sounds impressive. So what I'm doing right now is exactly what I encourage everyone else to do. Investigate, observe, and understand before committing capital. When you read the article, one line really stands out. It says Canton isn't trying to be a public blockchain. It's the regulated settlement layer where the biggest institutions in the world move real financial instruments. That single sentence captures why this matters so much in the current market cycle. We're entering a phase where institutional adoption isn't just a talking point anymore, it's accelerating. Bitcoin moving higher is part of that story, but the infrastructure beneath it is where the real long-term value is being built. And when you start seeing names like Goldman Sachs, BNP Paribas, Citi, HSBC, Deutsche Bank, and UBS associated with a network like this, that's not something you ignore. If you've followed me for any amount of time, you already know this, but for newer people, this is a critical lesson. Institutions of that size do not experiment with systems that don't work. They don't attach their names to half-baked ideas or theoretical tech demos. If they're involved, it's because the technology is already functional, compliant, and capable of handling real volume. That's why I treat these institutions as a research filter. When I see Goldman Sachs or Citi engaging with a network, it checks a box for me. It doesn't mean automatic investment, but it tells me this is something worth serious attention. Canton enables highly controlled, privacy-first environments where institutions can issue and settle tokenized assets using DAML smart contracts. This is about infrastructure, not hype. It's about efficiency, compliance, and scalability in a financial system that desperately needs all three. This is also why access matters. Projects like this aren't always easy to buy early. They're new, they're complex, and they don't immediately land on every major exchange. But based on what we've seen with projects like Plume and how quickly institutional-focused assets can migrate to Tier 1 exchanges, it wouldn't surprise me to see platforms like Uphold or Coinbase eventually listing Canton-related assets. When that happens, it's usually another signal that the market is recognizing the value. At its core, Canton is positioning itself as the enterprise backbone of tokenization. That's the theme you need to understand. Trillions of dollars in traditional financial assets are slowly moving on-chain, not in a speculative way, but in a structural way. That's why I'm in Plume, and that's why I'm watching Canton. Not because I want to chase the next pump, but because this is where the next cycle's foundation is being built. I'm big on diversification. I'm not a maximalist. I don't believe in betting everything on one narrative. But if you have room in your portfolio, or even just your research list, Canton Network is worth investigating. The white papers alone tell you how serious this project is. There are 2 of them, and they're massive. One is around 37 pages, and the other is close to 100 pages. That's not light reading, but serious infrastructure never is. Understanding Canton, even before making any investment decision, puts you ahead of the curve. And in this phase of crypto, being early doesn't mean buying the loudest thing. It means understanding the quiet systems before everyone else realizes how important they are. One of the most confusing parts for me during my initial deep dive into Canton Network was the question of whether it even had a token. Everywhere I looked, the messaging seemed contradictory. On one hand, many sources clearly stated that Canton does not have a public token, which immediately raised a red flag for me as an investor, because obviously you can't invest directly in something that doesn't have a tradable asset. But then, as I kept digging, I noticed something that didn't line up with that narrative. There was a Canton token showing up in rankings, sitting around the top 25, with real price data, real market activity, and a visible history. That's when I realized the issue wasn't that Canton didn't have a token, but that people were misunderstanding what the token actually represents. The confusion comes from the fact that Canton Network itself is a private, enterprise-grade blockchain system. That core infrastructure is not something you can directly buy into like a typical Layer 1 token. It's permissioned, regulated, and designed for institutions, not retail investors. However, there is a public-facing Canton token that exists on the blockchain and is tied to the broader ecosystem. These two things are related, but they serve different purposes. Once I understood that distinction, a lot of the puzzle pieces started falling into place. If you had followed Jay Rezo's research when he published that article, you would have seen that the Canton token was trading around 7 cents at the time. That's not a bad entry, especially considering where it sits now. Even at current prices, I don't look at it and think it's overheated or exhausted. Of course, nothing goes straight up forever. And if you're someone who waits for dips, you may have to be patient depending on how Bitcoin continues to behave. But the key point here isn't short-term price action. It's the institutional interest behind the network itself. This is where I want to slow things down a bit, because this is the part that most people rush through. When you're dealing with institutional-grade infrastructure, price discovery works differently. These assets don't always move in explosive retail-driven waves at first. Instead, they tend to grind higher as adoption increases quietly in the background. Then, when broader market awareness finally catches up, that's when you see more aggressive moves. That's why timing in this phase of crypto isn't just about charts. It's about understanding where capital is being positioned long before it becomes obvious. Another thing that stands out to me is how aligned Canton is with the broader tokenization narrative. Tokenization isn't some buzzword anymore. It's actively being implemented. Traditional assets are being brought on-chain because it reduces friction, lowers costs, and increases efficiency. Bonds, funds, and collateralized assets don't need hype. They need reliability. Canton is built specifically for that use case. That alone separates it from the vast majority of crypto projects that are still trying to invent demand instead of servicing existing demand. Now, I want to be very clear here. I am not telling anyone to invest in Canton. I'm not even saying I will invest in it myself. What I am saying is that this is the type of project that deserves serious attention in a portfolio that's focused on long-term positioning rather than short-term speculation. When I invest, I have a defined structure. I have a set number of tokens I'm involved in, and I have target levels for each of them. Once I reach those levels, that's when I start looking outward, exploring new projects that align with where the market is headed next. Canton fits that category for me right now. Exploration and evaluation. Another reason I'm taking my time is because projects like this require real due diligence. You can't skim a website, watch one video, and think you understand it. You have to read the white papers, understand the architecture, and grasp how it fits into the existing financial system. The MyCar white paper and the Polyglot Canton white paper are dense, technical, and detailed. That's not accidental. That's what serious infrastructure looks like. It's not designed to be easily digestible. It's designed to be robust. What also makes Canton interesting is that it doesn't need retail investors to succeed. That might sound strange, but it's actually a strength. Its success is tied to institutional adoption, not community hype. That means its growth is driven by real usage rather than marketing cycles. And historically, assets tied to real usage tend to outperform over longer time horizons, even if they're slower out of the gate. This also ties back to how the crypto market itself is evolving. We're moving away from an environment where narratives alone can sustain valuations. Utility, compliance, and integration are becoming non-negotiable. Governments are regulating, institutions are entering, and the projects that survive and thrive in that environment are the ones that can operate within those constraints. Canton was built for that reality from day one. So when people ask me why I'm even talking about something I don't currently own, this is the answer. Research is proactive, not reactive. By the time everyone is talking about a project, the easy gains are usually gone. The goal isn't to chase what's trending. It's to understand what's being built quietly, especially when it aligns with macro shifts like tokenization, institutional settlement, and financial infrastructure modernization. Canton Network sits right at that intersection. It's not flashy, it's not loud, but it's deeply embedded in where the financial system is heading. And whether or not I personally end up investing, understanding, it makes me a better investor overall. It sharpens how I evaluate other projects. It helps me filter noise from signal. And in a market that's becoming more complex by the day, that kind of clarity is invaluable. As we move further into this cycle, I expect more people to start paying attention to projects like this. Not because they're exciting, but because they're necessary. And when that shift happens, those who took the time to understand them early will be in a much stronger position than those who are just reacting to headlines. That's why I wanted to bring Canton Network to your attention. Not as a recommendation, not as a guarantee, but as a case study in how crypto is maturing. If you're serious about navigating this next phase, this is the kind of project